From the floor of the CME Group, this is Danny Riley on today's Cash Close. Now I know you miss me, my fellow traders, but you know what? It's just been a busy, busy market. And the name of this video is going to be the S&P 500 Futures Shock and Awe. The high of the day in the S&P came in at 2012 quarter mid-morning. The low came in at 1998.75 midday. And last, we're 2006 even. We're up 0.25 handles. We're not even up a whole handle. Total volume, we've got 1.4 million minis traded. We've got 3.7 thousand big S&Ps traded in the pit. And the MIM, MOC, the MIM started coming out like 200 million to sell. It flipped to like 35 million to buy. And then it jumped all the way up to 580 million to buy, and the actual MOC came out by 1 billion. Wow. Tell me they haven't been putting money to work, and I'll eat your hat. But anyways, next week we want to remind everybody that the banks are closed for the Columbus Day holiday, but the futures markets are open. On Monday's economic schedule, we have no economic releases, obviously, and we have 3 Fed governors speaking. Next week, we have a total of 17 economic releases. We have 8 T-bill or T-bond auctions or announcements, and we have a total of 5 Fed governors or bank presidents speaking. Excuse me. Okay, now let's get to the meat of this. The S&P, if it closes higher, which it looks like it's going to do right now, has been up 8 out of the last 9 days. Now we're going into the October expiration, and it looks like it's going to go out fairly well. We've had this big rally. We've had a 151 handle rally, and since last week's 1831 lows, and I think we've had a 180 handle rally since the August 24th Monday debauchery. So the markets have recovered quite nicely. Now this is where I think we're going with this. Look. When the Fed came out, when the Fed came out and couldn't hike rates because the jobs number were so weak, it was an indication to me that the buying that we've been seeing going in at month end is tied to the PPT and the fact that the Federal Reserve cannot raise interest rates in 2005. The selling started at the beginning of the first quarter, at the end of March, at that rebalance, and thus from then on, we've pretty much seen selling balances throughout the last 6 months. But as we went into the end of the third quarter, the September third quarter, we started to see these big buying balances: $3 billion to buy, $500 million to buy, today $1 billion to buy. And small, out of those buying balances, I think out of the last 8 days, there's been 6 of them have been in buying balances, and the 2 that have been for sale have been very small. And then we've got the S&P back all the way up to 2012, 2013, and trading 2008 as we're speaking. So it's my guess the way this is working is that the markets are starting to recoup some of these losses that they occurred when the volatility jumped. And my question to you guys is very simple, and it was kind of tried to put this out before. Was the big jump in volatility that we saw over the last 2 months, is it going to negate what could potentially be a volatile month, the volatile month of October, which is known for its big crashes? Well, you know what? It is known for its big crashes, but it's also known as the bear killer. So right now, you know what I'm thinking? That any kind of pullback that we get going into the middle of October or into the end of October is going to be a buying opportunity for the best 6 months for stocks starting November to April. And I still am holding firm on my prediction that the S&P will trade back to 2150 to 2200 by year end. And I'm going to leave it like that. And I'll see you on Monday on the opening print or closing print. That is, if my wife will do the recording. We'll see you on Monday.